First, this is Azam, Chief Market Analyst at EverTrade, and welcome to our daily technical analysis video. And happy Friday to you, folks. Today's topic is gold, and I know all of you guys love me talking about gold because you want me to tell you how high or how low can the price go. So let's go and have a look at these prices and then see where exactly are we going to move from the current price levels. Before we do that, as always, it is important for us to go through this slide of disclaimers and risk warnings. Anything which will be discussed cannot be perceived as an advice, blah, blah, blah. And the rest of the risk warning and disclosure is right in front of you. Please feel free to read that over here and on our website as well. Now, as always, what I'm going to do, first of all, is we are going to read some of the headlines with respect to gold prices. So the platform which you see in front of you, this is Bloomberg platform. So don't worry about it, because what it does is that it gives you free access for you to learn from one of the biggest and the professional platform which is out there, and then we are going to perform the fundamental and technical analysis together. We're going to look at the prices, and then we're going to go back to our favorite MT4 platform and then see exactly where those important price levels are. But just to begin with, right now, the gold price is trading at 1870. Okay, so we formed that the gold price is currently trading at 1870. Now, let's read some of the recent news in relation to gold prices. So over here, what you see is I have all the major important news with respect to gold prices. So the first headline that I see over here is gold decline eases but still on course for large weekly drop. So that headline says everything. What it means is that yes, the sell-off has eased off a little bit, but we are still very much on track to record the biggest weekly drop for gold prices. Now, we have another one which says gold expected to rebound. Okay, so that's a positive news. Then we have gold commodities round, and this one, this is more of a, I think, podcast. Then another one says ultra silver ETF, gold on a double dose of steroids. So that's news by Seeking Alpha, and it's again another sort of a positive news for gold prices as well. Now let's continue to see another headline which says gold picks up as dollar rally cools, set for worst week in 6. Now this tells us that the biggest sell-off that we've experienced in terms of gold prices was like we haven't seen such a big sell-off in literally in 6 weeks, and this is going to be the biggest sell-off for gold prices. But the prices have started to bounce back up because dollar is moving lower. So that is pretty much what we wanted to kind of develop from here. Let's just read one or two more headlines before we move forward further. There's another one by Dow Jones which says gold futures closing prices, volume. Okay, so that's again another positive news. And then we have Business Today which says gold price turns volatile, silver rate at 59,000 rupees. Not really too much information there. Another one, gold price analysis, holding on to 1862 pivotal for sustained recovery. So basically what that headline really means is that gold needs to stay above that 1862 price level. And then ETF news comes in which says the ETF sells gold, silver, and platinum. So that is not so much of a good news in terms of that, because if ETF shows that gold institutions are selling gold, so that means there is a bit more weakness ahead in terms of gold prices. So let's go back to our favorite platform, MT4, and then let's have a look at the price action. Before we do that, let me just explain the 3 important moving averages. The first one, which is right in front of you, is your 50-day moving average. So this is nothing but the 50 days average price for the gold, right? And the next one after that comes your 100-day moving average. Again, they are all simple moving averages. This is shown over here. And then finally, we have 200-day simple moving average shown over here. Now the question is, if you are wondering how to put these moving averages on the chart, it is very, very simple. You go to insert, you go to indicators, you go to trend, you go to moving averages from here, and then you change the period from here to 200, 200, and then to 50. That's how you put these moving averages on your chart. Now, with respect to RSI, which is the Relative Strength Index, which particularly tells us that if the price is in around this area, the 30 price mark, that means that the price is oversold, and meaning the gold price is likely to move to the upside. But if the price trades above the level of 70, which means if the price is oversold, that means that prices are likely to move to the downside. So that is how the RSI is very much trading, the strategy works at. Now, by looking at the RSI, what we see is that the RSI is trading to the upside. We're seeing that momentum bouncing from its oversold zone, and that is exactly what we are seeing with respect to the prices as well, because we are seeing a little bit of a bounce for gold prices, as you can see from here. So again, that is very positive for that. But what is negative in terms of a gold price, it really is the gold price has crossed below a critical level. And that level for me is right over here. Let me just draw that again. That level for me is right over here, where the price has really dropped below its 100-day simple moving average. This is not really positive in terms of a price action. But now, as you can see, that the price is really trying to break above the 100-day moving average. And if that happens, then the chances are that we could see a rally from here if the price breaks out of from this particular point. But if the price doesn't do that, then there won't be any rally. In fact, what we're going to see is a move to the downside, meaning this particular move from here can really continue towards its next important price level, and that important price level in terms of a gold price remains where the 200-day moving average is trading, which is in around $1,760 price level. So this particular price, this particular level right over here, currently what we are seeing is very, very important, because the price needs to break above the 100-day moving average in order for this trend to continue, in order for this move to continue its journey to the upside. Otherwise, we are looking for a move to the downside with respect to gold prices. Now, the question is that, yes, okay, if the price moves to the upside, is there any resistance? Is there any hesitation? Is there a point where you can perhaps take some sort of a profit taking if you are into the market, if you are in this trade? Well, certainly there is that, and that area is right over here, my friends. This is the area where we are looking to take some profit off the table. As you can see. So if the price comes between 1902 to 1919, this could be the area where we can see some sort of a profit taking. However, if the price comes over here and consolidates a little bit up and down for some time, then it breaks out of this zone, then we are going to move to the upside. And that means that this particular the next level of resistance, the next level of which can really challenge the price, is going to be this 50-day moving average, as you can see on the chart right over here. This is the point. So if price clears this area right over here, then it is going to see its next level of resistance or profit taking near 1958. So the question is, what do we do? Do we get into this trade right now? Yes, you can. How can you do that? You put your stop loss under the low of today's, so in around 1860, or to be a little bit more safer, you can put the low, your stop losses below this particular candle, which is in around, let's say, 1844 or just 1850, and shoot to the upside as the price is trading really now, because the price is in battle with his 100-day moving average, and shoot for this level, this particular price level, that which is between 1900. So that is the price level that you really kind of wanted to shoot towards. And if that works out, this trade could be really great. But on the opposite side, if the price doesn't do that, if the price doesn't really move to the upside, if it fails to break to the upside, then under those scenarios, the move can really be that the trade could really be that you may want to place your stop loss. You can go short, but just not now, but you can go short the moment that the price breaks below this 100-day moving average. Put your stop loss just on top of previous candles high, and I'm speaking of right over here. So you put your stop loss right over here, and then when the price breaks below this particular line, then you shoot and then continue to move to the downside and wait for the price towards its 1750 price level, because I believe that is the level that we are really going to be. But before that, it is very likely for the price to, before it goes all the way to there, it is very, very likely for the price to challenge its next area of where we could see some sort of a buying coming, which is right over here, and that is this area where we're seeing this massive rally to the upside. So keep an eye on that. So if the price comes over here, you may want it to take some profit off if the price breaks off it. So 1871. So you may want it to start taking some profit off the table if the price starts coming between 1808 level and then in around that, or let's say 1791. But if it breaks down that, then you really wanted to focus onto the next area of support, and that next area of support is right over here, right in this price level of 1760. I hope this makes sense, and I wish you good luck, and I'll speak to you guys next time. That's all for today.